Welcome back to the Malaysian Money Matters show. It's the 28th of August 25. Today, we're doing a deep dive into some really crucial updates, Malaysian companies, global shifts, and key political talks affecting our economy.
Yeah, lots happening. We'll try to connect the dots for you.
Absolutely. Let's jump right in with Malaysian company news. First up, Sime Darby. They posted a pretty strong net profit, RM$763 million for Q4.
But a big chunk of that was from a land sale, the Malaysia Vision Valley one.
Right. And interestingly, their motor division losses in China actually got worse, RM$140 million for the fiscal year.
So it's a bit of a mixed bag. The land sale provides a cushion, but the core auto business, especially in China, faces some serious headwinds. That price war is biting.
They're hoping for some intervention from China, I see, but it highlights that diversification need, doesn't it?
Definitely. While the Malaysian market, maybe with wage increases helping the mass market, offers some stability, the global pressures are intense. You can't rely on just one area.
Okay, next. IGB. They're partnering up with South Key City. Big land purchase in Johor Bahru, RM$214.97 million.
And right next to their existing Mid-Valley South Key. The plan is for a mixed-use development, potentially rivaling Mid-Valley City in KL.
That's quite ambitious.
It is, but it's a clear strategic play on the whole Johor-Singapore economic zone, the JS-SEZ, and that RTS link coming online.
So they're positioning themselves for that expected growth spillover.
Exactly. They're betting on creating a major new commercial hub there, really leveraging that improved connectivity with Singapore.
Now, this one surprised me a bit. SD Guthrie, the giant palm oil planter.
Yeah.
They're moving into data centers, planning industrial parks in Johor, about 10,000 hectares powered by solar.
Wow, that is a significant pivot. They're aiming for these new businesses to be, what, 30% of their bottom line by 2030?
That's the plan. Talk about diversification.
Well, it makes sense, doesn't it?
Oh.
Reducing reliance on volatile CPO prices by tapping into, well, a booming data center market and the green energy angle. It's about long-term value, finding stability.
Okay, staying with Plantations, but a different angle. The industry associations, MPOA and others, are pushing back on the windfall profit levy.
Yes, the RM-150 per ton levy. They're calling it punitive.
They say production costs are already high, like RM-2600 to RM-3000 per ton. And cooking oil producers are struggling, too, with the subsidy cap.
It puts serious financial strain on the sector. And you have to think about competitiveness long-term. If costs are too high, investment might lag.
And it also affects the cooking oil subsidy program, right? If CPO prices stay high relative to the cap.
Precisely. It's a tricky balance for the government revenue versus industry health and consumer prices.
Let's shift focus internationally. U.S. tariffs hitting India. President Trump doubled them to 50% on some goods.
Ouch. Yeah, reports say Indian exporters are finding it really hard to compete. Orders are apparently already moving to places like Bangladesh and Vietnam.
That's a direct hit. Shows how quickly these trade decisions ripple outwards.
Absolutely. It's part of that bigger picture of global trade tensions, supply chains getting reshuffled. And for India, it means real economic pain, possibly job losses in those industries.
Meanwhile, China's making a huge push on AI chips, aiming to triple output by 2026.
Led by Huawei, trying to reduce that dependence on NVIDIA, especially with U.S. export curbs.
They're building dedicated plants, aiming for one by year-end, more in 2026. That's rapid scaling.
It's that drive for self-sufficiency in critical tech. Beijing is pushing hard for homegrown solutions. It fuels innovation, sure, but it also likely means more tech friction globally.
And back in the U.S., President Trump's pressure on the Fed, pushing for deeper rate cuts.
Yeah, attacking Jerome Powell publicly. But the interesting thing is it might be backfiring, at least for long-term rates.
How so?
Well, despite the push for stimulus, those 10-year Treasury yields are staying high. Factors like tariffs, the deficit, and maybe fears the Fed could lose credibility. It all feeds into higher long-term borrowing costs.
So political pressure doesn't always get the intended result.
Not necessarily. Interfering with central bank independence can actually spook markets and push longer-term rates up, ironically hindering the economy.
All right, let's bring it back to Malaysia. Political scene updates. The government procurement bill, its second reading got delayed.
Facing quite a bit of criticism, wasn't it? Concerns about the finance minister having too much discretion.
Yeah, power to approve mega projects without limits, deciding if the procurement board is deadlocked.
Critics are worried about transparency and accountability. Drawing parallels to past issues like 1MDB, they argue you need really strong checks and balances in public spending.
To prevent potential abuse of power, essentially.
Exactly. Public trust is key there.
Then there's the Urban Renewal Bill. Minister Nunga Korming says it's going ahead, second reading today.
But that was also controversial. The Malaysian bar and others are raising flags.
Concerns about homeowners' rights, particularly the consent thresholds for forcing a sale for redevelopment.
Right, like 80% for newer buildings, 75% for older ones, even lower for buildings deemed unsafe. Critics worry it could displace vulnerable communities without enough protection.
So it's that classic tension between urban development needs and protecting individual property rights.
A very delicate balance. Finding ways to renew urban areas without trampling on rights requires really careful safeguards and transparent processes.
Okay, ending on a more cooperative note. Malaysia and Brunei held their annual leaders' consultation.
And they've pledged to boost ties, particularly in energy and trade.
Yeah, the statement mentioned energy, connectivity, agriculture, tourism, halal industry, focusing on Borneo's shared resources.
That makes a lot of sense strategically. Strengthening those cross-border ties, especially on things like energy security and food security, through joint projects.
Building regional resilience together.
Yeah, it's important for shared prosperity and stability in the region.
Okay, that wraps up our deep dive for today. Quite a mix of corporate strategy, global pressures, and some pretty significant legislative debates here at home.
Definitely a lot to track.
As we see these big plans unfold, like urban renewal or major procurement changes, it does make you think about that balance we just discussed. How do we ensure progress doesn't leave individuals behind? Food for thought. Don't miss our next update. Make sure you subscribe to the Malaysia Money Matters podcast wherever you get your shows.
Hey there, thanks for tuning in. If you would like a deeper dive into all the investment opportunities from today's news, subscribe to my newsletter at moneymatters.substack.com. I will be sharing a deeper analysis of the key investment opportunities from today's news, including what makes these opportunities stand out and how they fit into the broader market trends. By subscribing to the Malaysia Money Matters newsletter, you will also get exclusive insights on my watch list and portfolio and fundamental reports on Malaysian listed companies.